We talked about Bitcoin at all-time highs, but it's not just the only asset that's at all-time highs right now. We've got the US 30, US 500, the Tech 100, the Small Cap 2000, all of them at or exceeding all-time highs. We've got, in the meantime, the context of rate cuts, stagflation, perhaps stimulus checks, which have been mentioned and floated this week, 1 to 2K stimulus checks to be funded through the tariff revenue. And for Americans with a household wealth or household income, under $100,000, those are the numbers that are being floated. We've got money supply growing all over the world, and let's see, we've also got rate cuts, like we mentioned, all over the place. Here's some data on rate cuts, central banks around the world, and you can see the big spikes around 2008, 2009, and then the COVID spike. We had 196 cuts in a 12-month period, and we're at 168 cuts right now. So this is the environment in which all of these relatively scarce assets relative to the dollar are really spiking, and we've got rate cuts happening at the same time and possible stimulus. So what do you guys think? Here's the stimulus check from 2008, 2020, 21, 20 probably.
2020.
20, yep.
That's a fresh number, Brady?
This was I screenshotted this an hour ago maybe.
Cool.
Yeah, so you're up 1,700%. Your $1,200 stimulus check, had you bought Bitcoin with all of it, would be worth $22,152 right now.
Seems like a decent store of value to me.
Yeah, it's nice when your store of value also appreciates so quickly. And this is where we are with a monetizing asset. We get to ride that appreciation up as adoption continues to grow. So pretty good deal. Front running all these institutions and governments, massive corporations that have still really yet to get into this asset, but they're trying to find ways to do it increasingly. And here we all are as mere plebs having stacked Bitcoin for 8, 9, 10 years in some cases. So pretty cool. I can't think of another example in history where such a asymmetric asset was so accessible to individuals long before it was accessible to businesses and governments.
Agreed. And I would also add to that, with such an ecosystem of education and passion around it. Like,
Yes.
maybe I always do point to the big tech stocks as, since 1990, 1995, depending on the company, those have been just like absolute home runs. Microsoft, Apple, Amazon, Google, now Nvidia a little bit later. Some of them like rival Bitcoin's gains, especially if you strip out like the first few years of Bitcoin where it went ridiculous from monetizing for the first time. But there wasn't like this education around. It wasn't like, hey, DCA into Apple stock, right? Like, it was very few and far between with people who put their whole life savings in these tech stocks and held it for years and years. Bitcoin, one of the many ways that Bitcoin is unique. And I'll just add on one more thing before someone else hops in. But that chart you showed on the rate cuts, Brady, I do think this is important. We're switching into a rate cutting cycle. There's no doubt about that. The one thing I would point out, though, is 2009 and 2020, those were like cut to zero. This is a once in a lifetime crisis, QE for trillions of dollars. I don't think any of us are forecasting that is around the corner. We likely have higher lows on rates, even within a cutting cycle here. Like, I don't really think the Fed funds rate is going to get down to zero anytime soon. So just wanted to throw that out there. But we still are in a cutting cycle, and all things equal, lower rates should be positive for what we call risk assets, which includes Bitcoin, stocks, even gold as well.
Matt, any thoughts? I don't want to.
No, sorry guys. I've been quiet over here. I think my 3-year-old took a tumble, and there was a lot of screaming going on. So I apologize. Yes, we have four young kids here. My wife homeschools, so sorry about that. Yeah, I know. Bitcoin is the newest monetary asset and the best form of money. And I think we have the DXY also down something like 10% this year, right? So all this makes sense because we're in a debt-based system. The government's going to have to print more money. And the markets realize this. We're seeing record gold highs. Bitcoin's going to follow. So it's an exciting time.
the great debasement trade. JP Morgan talking about
I
that?
love that.
Or is it Citi? I'm spaced on which one it was, but you see that. And I think the rate cutting chart, someone could look at that and say, that is bad, right? Because it's around 2008, 2009, awful time. Oh, right before COVID, that's a bad time. So that must mean the market's in trouble. And I think ultimately it's this, call it bipolar bifurcation of the market of it's going to be a really bad time if you don't own assets. And so it's a lot of the same of what it's been. But if we go into this rate cutting cycle, Trump has said exactly what he wants to do. And I was listening to a macro podcast, and like a lot of what you can look at is Trump is going to signal and tell everyone exactly what he wants to do. He wants rates to go to nothing. He wants to get rid of J-Powell. He wants to run this thing hot. He tweeted that we're going to grow our way out of this. What does that mean? GDP, we're going to grow. I'm trying to remember if it was Safedine or Booth or somebody like doing the math on what our GDP growth would have to be to really get out of this quasi debt spiral. And it's something that we've never seen ever. And so the law of large numbers means that's probably not going to happen. And so the stimulus number that we just saw a little bit ago, that is a nominal return, even in real return stats, right? You're buying more goods and services with Bitcoin. Same with gold. If you measure the S&P in gold terms, the S&P has not made an all-time high since the tech boom. Right. And so it's important to understand, like, what are you measuring everything by? And I think that's the major theme as we move forward. It's hard assets over financial assets. And that's the big shift that we're seeing.
You mentioned the debasement trade. We have a tweet here talking about this JP Morgan analysts calling this investment in Bitcoin and gold. And they define the trade as that it reflects a combination of factors which in our client conversations range from elevated geopolitical and policy uncertainty to uncertainty about the long-term inflation backdrop to concerns about debt debasement due to persistently high government deficits across major economies, to concerns about Fed independence, to waning confidence in fiat currencies in certain emerging markets in particular, and to a broader diversification away from the US dollar, to which Michael Saylor replies, yeah, we call it saving our money. Condense that 50-word salad describing the debasement trade into, yeah, we call it saving our money. We call it stacking sats. We call it buy a Bitcoin. And this is exactly what we've been doing. I'm glad to see JP Morgan coming around to this idea that maybe we should hedge against all of these things, which amount to debasing the dollar.
I love it. Love his response. No, I love it. It's great. And I feel like it's a sign to me that it's still early. Like, you still have the TradFi people that are coming up with these they still don't quite get it. They still don't quite get like why this is all possible.
Yeah.
And they're coming up with that. Maybe this is just what they do. They come up with more complicated jargon to explain something that's super simple. So I love to see Saylor in the comments with that.
What a novelty, right? You can save your money without having to understand any of that word salad. This is the case with Bitcoin. We have not been able to save in the dollar for a long time because it has lost its store of value function simply because it is being debased so much. So it's cool to have something where you can just save your money without thinking about it.
Yeah, I don't want to have to be a landlord or full-time investment analyst to be able to have my wealth continue through time, my savings. Finally, Bitcoin now fixes this.
And one of the things I talked about in there, and I don't know where I heard this recently, but it's like this idea of Fed independence, how Trump is trying to get his way, tweeting AI images of J-Powell getting fired, et cetera, and putting pressure. That's not anything new. Lyndon B. Johnson, there's a story that the Fed chair at the time basically invited him down to, I think he was in Texas somewhere, maybe Dallas, and basically berated him for 2 hours. And at one point, there was an altercation where he basically lifted him up, almost choking him, telling him he had to cut rates. So there's been presidents that have put pressure on the Federal Reserve Chair in the past. And it is fairly, unfortunately, common where presidents see the money printer button and the easy money as a way to fix things and make themselves look good. And I think we're in a moment where, yes, we're seeing that, but it's not something that's the first time we've seen it in history. Fun little fact that I learned that I will share.
Governments are getting in on the debasement trade as well. Lots of gold purchasing happening around the world. And the value, of course, with the gold going into, we're at all-time highs already, beyond all-time highs, right? With gold.
Yes. Yeah.
3,900. Yeah.
Yeah, 3,900. So you can see the value of U.S. official gold holdings up to $1.1 trillion. Just imagine this number if we had still been on the gold standard and we're accumulating gold to back the dollar. Things may not be in such a sticky situation with the dollar right now.
And I think one of the things, again, going back to DC and the debasement trade, it's kind of like the Lawrence Lepard trade, right? He's been pro Bitcoin, pro gold for quite a while. And he had a panel and he was talking about if the US really still had all its gold, because it's come under fire, right? That at Fort Knox, we really don't have the actual gold. Hence why they said, hey, we're going to audit it. But really, we just let that be memory hold. And we didn't get there. Next story, right? That it would really help because it was in the conversation around the Bitcoin strategic reserve and like how it can actually help with paying off the deficit. And so looking at those things is interesting. And then I think if gold, which it'll probably close higher today, 7 straight weeks of up, that's pretty impressive. That's a huge move for gold.
Yeah. Lynn Alden was talking about Bitcoin catching up with gold because in terms of gains over the past 12 months, because she thought that gold was a bit overbought at this point and Bitcoin underbought, but it's effectively the same or a similar trade. And so she sees Bitcoin outperforming gold over the next 6 to 12 months.
I think you're not going to get an argument from this panel here. That's for sure. I think the other reason that chart is interesting is because if the US owns 1 trillion of gold, this is related to the point you were making, Brady, which is let's compare that to a few things. One, whatever the amount of debt is that we have now, 37 trillion or something like that. So that's the quote unquote real money or one of the reserve assets that we have that I don't want to say backs the debt because it's not a convertibility thing, but there is this like implicit idea of, okay, the reserve assets and many other things back a fiat currency. We don't really know what it is. Like we're 54 years into this experiment, but we think that one of the assets that quote unquote backs it is gold, but they have 1 trillion, the US government relative to 37 trillion of debt. Another reason that number is interesting is because if it's 1 trillion that the US government holds, if we can trust that they actually do hold that, you compare that to the total market cap of gold, which somewhere between 25 to 20 to 30 trillion. So if it's 1 out of 20, that's 5%. If it's 1 out of 30, that's 3.33%. So the US government has something between, call it 3 to 5% of the total market value of gold. And then you would want, this does get into the SBR conversation because you then start saying, okay, maybe the US wants to have at least as much Bitcoin out of the total. Maybe they want to have more if they think we are headed into a world where gold is playing less of a role and Bitcoin's playing more. Maybe they want to have more. And one takeaway I will give from the conference, one of the political people was speaking. I can't remember who it was, but I think he made the point that it was like, the ordering of priorities from the government was basically the Genius bill for stable coins, which they did pass, and then Clarity, which I think is still happening now, I believe. I don't know if that's fully passed or if it is, you guys tell me. And then third would be SBR. So the SBR is just not as important, and it is a much bigger sell, I think, for 2 reasons. One is that some politicians are just going to be like, hey, I don't care about this. And the other reason, I think, if you do have long-term oriented politicians within the government, you want to be really careful with how you acquire Bitcoin. And I could actually make an argument that the longer we go without an announced SBR, like the better it is for Bitcoin over the long term, because then they're being serious. They're like, hey, we're not just going to announce we bought $1 billion worth of Bitcoin just because we want to make good on the campaign promise from a few years ago. That would be like a throwaway. If they're serious about Bitcoin being part of the financial system, part of reserve assets, like you want them to do this in secretive for as long as possible and delay that announcement. So anyway, I think showing the gold that is owned by the government ends up leading to a whole bunch of different conversations.
You can go to swan.com and check out our offerings there. We'll help you invest in Bitcoin, build your Bitcoin wealth. We do build strong relationships. Each one of these guys works with a set of clients, and we a lot of times become friends with our clients and really invest in the long term, building generational wealth for their family. So we're thinking decades and decades of long relationships with clients and really helping them take the most advantage out of this opportunity with Bitcoin. We offer Swan Private, which is your way to get a direct connection with a Bitcoin expert on our team, ask your questions, get help on your strategy, on executing that strategy, on security, safety, navigating this new money. So we'd love to work with you to build Bitcoin generational wealth. We'll see you again next Friday. See you guys.